Tom,
Julian,
great to see you.
good to see you too.
Quick intro to Tom for people who don't know him. Tom used to have Australia's largest on-course bookmaker, and in 2010, he launched an online wagering company, right? If you were in the affiliate business about 10 years ago, you would see this, right? Because the amount of acquisitions, the amount of retentions, but especially the amount of FTDs in Australia was insane at a time when the market was really, really growing. 4 years later, William Hill acquired Waterhouse.com and made Tom the CEO of William Hill Australia, right? Spent some time there. And then Tom, about 3 years ago, right, started his own VC, where he's now the CIO, or Chief Investment Officer. Tom, good to have you here.
Good to have you. Good to be here.
So today we're going to have a chat about the US, right? The US is something which actually, especially in the last few days, has been quite topical for three reasons. One, as you're probably aware, the currency markets have collapsed, right? Other than the US dollar is very strong, right? So if you're on one side, it's a good thing. If you're on the other side, it's not so good. But secondly, there's a lot of things happening around specific gaming share prices in the US, right? And from an investor's perspective, it's almost a very interesting crossroads. And it'd be good to get the perspective of a US-facing VC, such as Waterhouse VC, about where things are.
Look, as you mentioned, I came from being an on-course bookmaker and then ran William Hill Australia. My expertise was not being an investor. My expertise was understanding being the betting ecosystem and running one of these corporates. And the wrinkle that I saw is that it was very easy for an analyst to understand whether MGM, Caesars, DraftKings, Flutter, what valuation they should be. They could have an understanding about the lines of the P&L. They could also have probably a good understanding, a better understanding than me in the macro environment. But what they couldn't get is understanding these technology companies that integrate into the likes of William Hill, Ladbrokes, DraftKings, etc. And so our focus has really been having our tech team going and looking at technology. Is the technology good? Can the technology go from having 2 customers to 20 customers? And is the technology needed in a new market such as America? And so I constantly see all these macro themes, but I have no knowledge of how to assess a macro environment. Or these large companies, I can say, oh, look, I think Flutter's great value because they've got scale, they've got operational leverage, and they've got a great team of people of the dozen I've met. But I don't really know, compared to anyone else in the industry, whether that is a buy. You know, over the next 10 years, can I see Flutter being dominant in the US? Definitely, but I wouldn't want to back. I've got no edge. I've got no specific insight than everyone else in the audience. But what we do have, and especially because of our technology team, is finding great technology that we want to back and that we think that we can help expand from having a few customers to a lot of customers. I guess from my point of view, I'm always interested in what you think in terms of the macro environment, because you have that more broader outlook of what the market is doing. What are your thoughts on?
It's an interesting point. The fundamental difference between a VC that invests in private-based businesses compared to the VC that invests in public-based businesses is, as a private VC, you try to look for the edge. You try to look for what is known as the unfair advantage. Can I acquire a business or invest heavily in a business that's apparently going to be acquired by a major player? Do they have a cheaper way of acquiring players? And I think the way the US market in particular is shaping, from a private perspective, is slightly worrisome. Why? Because we're seeing all these inflated costs of acquisitions, right? And they're going up higher and higher. And we don't know at which point the top will be called. What we do know is there's going to be consolidation some point next year, right? This is when the DraftKings of this world, right, will announce Q2, Q3 results that clearly show that this growth is unsustainable because it comes at a bottom cost. So whereas for a private-based VC, it doesn't make sense to take significant positions in this. And we heard this just from the panel just over here. But I think from a small startup perspective, instead of looking at the operators, you look at what powers the operators. And that's where
Yeah.
things become really interesting, like database companies, right? Companies providing sports feeds. And I think that's where the opportunity lies for non-publicly traded assets, if that makes sense.
Agree. You're right. And this is sorry, cutting out. It might be my. This is what I learned from bookmaking point of view is that you've got to have an edge. If you're going to win betting, you have to have an edge over the market, and then you have to make sure that when you have an edge, you can bet heavily, and that's what we try and do with our investments. Is we make a small investment in a lot of technology providers, and then we have option upside. So if we can get a deal to come off, then if we can get a deal to come off, if we can get a deal to come off, then we're able to convert the options. And that my grandfather always used to say to me, he was a huge bookie back in the 60s. He used to say, well, look, you've got to limit your losses and unlimit your wins. And that's sort of what we try and do is have very focused, smaller investments. And then when we get a winner, have optionality in that company that we can increase the stake significantly.
So it does reach another question. You've obviously been exposed a lot to the Australian market. What parallels or contrasts are you seeing with the US market right now, right? I would say the US market's about 10 years behind us when you really think about it. But it'd be good to get your insights on this.
Look, the Australian market up until 2 years ago, I would have said, well, look, it's US market's playing out, scale so important, tax, regulation, all increase over time. And those that have those that operational leverage have huge advantages. The US has been a lot quicker in terms of operators being on the front foot in terms of regulation and like customer protection and all this sort of stuff. I think compared to Australia, we lagged quite a bit. But the thing that's interesting in the Australian market is that, and I didn't see this coming, is that there's now a long tail of smaller operators that are very successful in the Australian market. And that franchise, like a McDonald's franchise model, the technology's got a lot cheaper to roll out in Australia, so you don't need $50 million technology budget to have a good platform. And you've got lots of ex-sole trader bookmakers that are starting up bookmaking operations, and we've gone from having where you'd say, oh, look, there's half a dozen good operators in Australia you can bet with, to now there's 100.
Yeah.
And whether because of the licensing that plays out in America, I think that's a different story, but it may play out in the UK more so. I'm surprised with some of these smaller operators buying up shop fronts, the old estates of William Hill and Paddy Power, and they're building successful, very profitable operations. So I think that theme of scale is playing out in that everyone wants to have scale in the US, but I think this the difference is the long tail may not play out, but what may play out as winner is if they come up with a unique proposition or unique target market, and Ladbrokes Entain proved that in Australia. They came in subscale, and they came up with a way to deliver technology quickly and in a unique way, and they became a top 3 player. It was a very impressive strategy and execution.
Do you think it's sustainable?
It's sustainable in terms of in terms of not being scale and being in the market.
Yeah.
I think it just depends on what your desire is. I think if you view it as being, I'm going to be very nimble and find a way to make profits each year, you can have a very good profitable business being subscale.
Yeah.
But if I'm going to be a dominant listed global company, no, I think you're in regulated white markets, which scale is ultra important.
I think that makes sense. So one asset in particular, which we're seeing growing a lot, which is about to enter the US, is an Australian operator called Dabble. They only started about 8 months ago, right? They've cornered the market in Australia in terms of downloads. They want to enter the US through regulated territories, but they target a very specific generation. They don't target the old punter, right? That actually sits in a pub with a betting slip. They target the millennials and the Gen Zs who effectively just use Discord and Telegram to communicate on. Is this the wave of investment in sportsbooks in the US?
Look, I think that social interaction, they've changed the game. You know, like if they pitched that to me 4 years ago, I'd gone, I don't know, I don't think that can work. But I see with, we have a subscription tipping business in Australia, and I see on that the social interaction and the banter that happens day in, day out, there's so much stickiness compared to a traditional sports book because they're part of that community. They've bought into it. They are talking with like-for-like individuals that live and breathe what they're doing. And Dabble, you're right, what Dabble has achieved in a mature market is incredible in Australia. And I think that is a blueprint of what can be replicated, or for them to just take over of that niche in the US. And I think you're seeing the large-scale operators have tried to replicate certain aspects of it, but it's very hard in these legacy platforms to fully integrate that social interaction. And yeah, I think you're always learning, aren't you? And that's why I wouldn't pick this 4 years, but you've got to keep your ear to the ground. You've got to come to conferences like this. You've got to go and meet people in the industry and see what's new and growing. Otherwise, you have this mindset that's stagnant.
Yes. And I think that's never more true with the US market in particular, especially now. It does lead to an interesting question. B2B or B2C in the US? Which do you think is more lucrative at the moment?
So we only focus on B2B. And the reason why we focus on B2B is, firstly, I've got no edge understanding the P&L of a B2C.
Right.
The taxing and regulation is a concern. And also, I think we've got a unique insight in that technology. Having run William Hill, we had 300 products on the roadmap, and I realised how hard it was to get into the technology roadmap. We had 170 developers in Sydney and another 100 in the Philippines, and we couldn't roll out enough product to keep that roadmap from coming down. And so I understand how hard it is to get into these ecosystems. And our technology team is very good at understanding what products will work and what are easy to integrate. So for me, I only focus on B2B. I think that's where there's massive growth if you can understand that a business is... If a business has got 2 contracts, it's very hard to put a true valuation on their current revenue.
Yeah.
But if you think they can get 30 contracts, you can get very comfortable with current valuation. And so for me, there's plenty of money to be made if you've got a unique edge in B2C.
But then it's just trying to pick a lottery, right? That's the problem. You don't know which operator has an edge. So best example is DraftKings, right? We all thought, right, a year ago, DraftKings had the edge, right? Share price was going up, quarterly reports, right? Until somebody decided to do the calculation of lifetime value on acquisition costs, right?
Yep.
So the ratio started to imbalance. Then you compare FanDuel, right? FanDuel numbers are incredible, right? But they're being kept artificially low because of the whole kind of flutter hemisphere kind of that surrounds it. So I guess edge is becoming quite subjective. Would you agree?
Correct. And also you find a top-tier operator like Flutter, you're paying a very decent multiple to earnings, you know, so you're having to pay for that premium. And then the concern is in the mature markets, the top line growth is significantly slowing now. You know, they're very profitable business, but whether that's 23 times or 30 times earnings, I don't know with Flutter whether that's value. I definitely know they're a top tier operator. And if DraftKings can solve their customer journey and make that the same value per player, well, they've got huge brand awareness, and those are fixable issues.
Yes.
Then maybe their value. But I don't know how to assess.
Yeah, for me, Flutter would be a buy. So on the questions that were raised in the previous panel, I can see Flutter from a B2C perspective as having enough cash flow, because it does come to free cash flow, about being able to survive what essentially is an acquisition.
What's been incredible about Flutter is that they've been very good with their buying, like what they did with Sportsbet in Australia. What a behemoth that company is, and what they were able to do with FanDuel in the US. They're not only great at buying these assets at what looks now value, is that they're extremely good at executing and putting in a team, and they must have a very deep bench of talent in that business, because it's very hard to go to the other side of the world, and with all the regulatory hurdles and all of the unique customer ways, it's like Sportsbet, it feels an Australian company. Like they have the voice of a way an Australian wants to interact with the site. They've done really well with regulation. It's 10 out of 10 in terms of execution.
I agree with that. And if I were a B2C stock picker, they would definitely be on the list. But I'm with you. I prefer B2B. B2B is more controllable. The price earnings ratios are more sensible. right? So we've seen all the FANG stocks, right? The Facebooks, the Apples, the Netflix is all taking a dive because now the revenue quarterlies are not as profitable as the COVID times because everybody's outdoors. But B2B are different, right? B2B can effectively scale and franchise as long as they have sensible ways of entering new markets.
Correct. Yeah, it's and the B2B, as long as they have a moat or something unique, like they were talking about evolution in the previous panel, if you believe that they've got a unique product and they're a technology company that can give the best live dealer experience, they can stop professional syndicates finding an edge, they've got the most talented people, and if you believe they've got that moat, well, they're growing revenues at 80% year on year. They look cheap compared
Yes.
to, and trading at 20 times earnings. You know,
Yes.
they look cheap compared to those FANG stocks. It's just whether you have a good insight whether those revenues are going to be recurring and growing over a period of time.
Yeah, I agree. And it's all to play for right now. Let's look at emerging tech, right, in the US. What segments, what sectors do you think are undervalued at the moment?
Well, it's hard to say what a... well, I guess if you're looking broadly, and we are not in any of these businesses, but the affiliate businesses have had absolutely haircut in terms of they're being turned off in Australia.
Yep.
They've had the Google issue. They've had the UK hard and tough on what they get, and there's definitely a need for them in US markets. So you're getting a combined to these listed affiliate businesses at 6 times earnings, and they look cheap. It's not
Yep.
our edge to just go in blindly and to go into listed companies, but they look like they're cheap and they look like they're needed in the US market.
Yep.
But for us, it's really trying to work out what are issues in the US, and then are these B2B, can they solve some of these issues? And you never know. You know, like we're in, Tim mentioned BetMakers, we're in BetMakers.
Yeah.
We think that fixed odds racing is a chance that it could really take off on the US. You know, it solves a margin issue for
Yes.
the bookmakers in the US. It solves a gap in product because those big sports don't run all year long. But it may or may not. For us, it's worth the investment to be part of that that product in case it does
Yep.
take off. We think there's growth, and we think we can buy in at value. Esports is another interesting. It definitely, the value per customer looks low in regulated markets where I've seen fixed odds, but it's now licensed in 4 states. It fills the product gap. It's definitely something to look at. We've put investment into that area. In terms of what else can iGaming, if it rolls out from 11 to 26 states, well then you want to be in some of those
You'd
live.
hope.
Yeah,
Yeah.
it's and it fills the product gap, and
Yeah.
it definitely is going to be wanted by the. So really, what are the issues that the B2C are facing, and what are the possible solutions?
Yeah.
Value per player, customer journey. We're in a voice betting business, text messaging betting. Can that dramatically change in a new state that rolls out? Yeah, it's not a mature market. So we just want to have bets or investments in what we think can be possible solutions. And if they turn out to be solutions, then we have huge upside because we go in at valuations that their current revenue.
So it's a good point because one of my current picks would actually be in the affiliate space. So there's a company like gambling.com, right?
Yep.
It was actually, in my view, undervalued, right now. But what they're really doing is they're building a cachet of content that's trackable, that's searchable, that using the content in publications, right? In news publications as opposed to non-news journals. And that really helps with their SEO and their domain authority. And that you can see is gradually going to increase and becomes even more relevant.
Yeah.
If the affiliate companies in the US pivot themselves towards news portals and become credible news portals, and as we've seen in Australia as well, I think that becomes a very interesting M&A hot pick, if you agree.
No, I agree. I think, and you were part of the journey in Australia in terms of that massive affiliate growth.
RaceNet, yeah.
And if you can have unique content that's very sticky and brings customers in a growing market like the US, you become very valuable.
Yeah.
And I think you're right there. They are based not on their US potential, they're based on their current earnings, which looks broadly value.
Looks like a hot pick.
Yeah.
Let's look slightly outside the US for now, right? Any emerging markets, any existing markets are of particular interest outside of the US?
Look, I think you're seeing, obviously the biggest economic nation in the world's allowed gambling
Yep.
in the last online sports betting the first time in 100 years. And you've got that tailwind, which you're seeing scale operators growing revenues 80, 90%, and it's only going to be significantly more for the smaller operators. So I think the US, in terms of selling B2B, there's such long runway in the US. But I think also you're seeing for the first time, well, ever, that you can operate online outside of traditional banking system with crypto. And I think those two areas, the US gets talked about the growth, but I think it just dwarfs the growth of what you're seeing in the crypto landscape, because you can have people in places that they traditionally couldn't access online. They'd have to go through their dealer in the back of a 7-Eleven, and then they'd have to then basically pull those bets. You're having them getting a great online experience, getting all of the online products, and being able to bet with these operators. And those operators are getting access to markets that have never properly been accessed straight from operator to consumer. And the growth is dwarfing any other market. So I think that's also an opportunity for B2B operators, is sell these amazing products. The crypto operators want the best product in the world. The US operators want the best product in the world. But I think if you've got a great product,
it doesn't matter.
Why limit yourself to even those two? Go to every market and say, well, look, this is what I've done in this market. This is the potential. Do you want to trial it? This is the opportunity, and roll it out everywhere.
It's an interesting paradigm, because I don't know if you saw recently, actually 2 days ago, the government of Curaçao has announced that the crypto licenses for existing operators might not necessarily be continued. It's still in a state of flux right now, but what it does show is if you have an operator right now that's trading in Curaçao, that's offering crypto-based services, that might not continue. But then at the same time, who's going to stop a crypto operator for not offering their services to the rest of the world? And I think crypto is going to have to form some form of inevitable future for the majority of operators, particularly because payment services are becoming even worse to handle. In fact, one hot pick for investment outside of gambling is actually payment services. If you manage to find any payment services that actually can provide the problem, right, of solving the friction between on-ramping and off-ramp of a wallet, then you've made your next unicorn. What's your take on fintech?
I think that's you're spot on. I see my mindset has changed, that there'll be a few global operators and they'll dominate, and that's the end of the story. The Australian market is shown. When my grandfather was a bookie, there was 1,000 bookmakers across Australia, and when I was a bookie, there were hundreds. To me, I think there is, and the fact that tech is so much cheaper now to start up, and a lot of operators are happy to do it as a percentage of gross revenue. So they give you a very small entry point, and then they want to be part of business partners basically with you. The biggest issue that I see of actually getting these operators on board, it used to be, oh, well, you go to OpenBet and it takes you 2 years to get a platform up and going, and you have to have, and it was very expensive upfront cost, to now, the biggest issue is getting a merchant facility. So I think the people that can solve that issue, there's a huge market and huge margin for them, because it seems that these smaller operators are happy to pay a premium over traditional merchant facilities. And then I also think that, from your point about crypto and regulation, is we touched on it outside, is that really for them to integrate into the B2B suppliers, the B2B suppliers only want to integrate if they're with a licensed operator. And so I see that you might have a black operator that builds all their in-house tech and is a fantastic operator that services.
And there's a lot of them out there right now.
And then you'll have the operators that are wanting the B2B service. They're going to have to be licensed in jurisdictions and be white.
Look, I think we will see the end of grey at some point, right? We will just see pure white and a lot of black, right? And that's purely because there's over-regulation. Look at Europe, right? I strongly think the US is going to go down that route, wrongly, right? Take New York. We suspect California as well. So at some point, you're actually going to have an operator that's really happy being the Walter White, right, of gambling, and just enjoying being in the black, but making significant revenues, but not knowing where they're going to sleep at night, right? But making significant returns from that. And then you have the white operators that will gradually be shrunk, right? And acquired by media companies.
But also there's different shades of white, aren't there? Like there's operators that are like US licensed when operating here, here and here.
Yeah.
And then you have listed white operators that are like, well, I'm happy to leave out that market, but I think this market fits with our licensing and our listing, and I'm happy to operate in this country, and this country, and this country. And I think there's different versions of...
Yeah. I think the greys will move slowly white, and then we start seeing shades of white, and then before we know it, that's what all the journals will be saying.
Yeah.
I think we should touch a bit upon currency right now. There's been a massive turmoil in the markets, right? Both the euro and the pound have literally fallen off a cliff, particularly with regards to the US. Where do you think lies the opportunity? Is it something that we should take advantage of now, or do you think the bottom hasn't been called yet?
Again, I have very poor macro view, but the way I view it is that as long as we go into business what we think are cheap and we have the option upside, well, if the market is booming, we're selling in a booming market. And when the market's depressed, we're getting ultra what we think is value, but we can't realize that value to the full extent until the market takes off again. And with our B2B investments, we're not looking to sell them. They may have contracts in the UK, but not just in the UK. We're looking to the US, to the rest of Europe, to Australia. So we have diversification in terms of where we're getting money from. But really for us, we don't want to take a bet on our macro view because I have no idea. I have more of an idea, well, is this product good enough to be in FanDuel or PointsBet or whoever? And can they increase revenue from today? And that to me is enough of an edge to take, to not have to worry too much about whether the pound goes down or the Aussie dollar goes down, is that our return over a long period of time will be reflected just because of that edge rather than picking the timing. But if you can and have got an insight, there's definitely an edge to be had. And how are you playing it in that?
M&A has just exploded over the last few weeks. Particularly anyone who's on the US side looking to buy European and particularly British-based assets. The bottom might not have been called yet, but it's still 15% cheaper than it was a month ago, right? And so you can see there's a massive flurry, right, of interest and almost expedited due diligence stages to get to the point of signing a term sheet, right, with a specific number at the bottom. One client we're selling at the moment, right, just said, I don't care what the DD process looks like. Bitcoin's under $20,000, and I need to buy all my BTC because it's going to double this time next year, right? So sell, because somebody's going to buy me, right?
Yep.
So the M&A was I think the investment. I think you're absolutely right. I think the investment area is kind of it's a long-term play anyway. The M&A side has all of a sudden become very accelerated, very short-sighted, but very exciting. If that makes sense.
Yes. No, it makes complete sense.
We've only got a couple of minutes left. I want to talk about what's hot, right, and what's emerging. So what investments are you most excited about right now?
Look, I think platform businesses that can roll out a change mindset of, I think that I can't see why someone doesn't become a bookmaker in the Australian market and in the UK market than take over a McDonald's franchise.
Yep.
Everyone, when I was a kid, you're like, oh, well, why don't you people are like, oh, you become a McDonald's franchise, you can have your own business, you take advantage of all of their scale and operational efficiencies that they've got, and you can make, I don't know, $1 million a year I don't know if that's the figure for owning a McDonald's franchise, but being a bookmaker, you can build up a very good business and there's very little upfront cost.
Yep.
And who doesn't want to be a bookie? It's so much fun.
Yep.
It's better than cleaning the floors of McDonald's and serving burgers. It's terrific and it's very lucrative. So I think that we're at the very beginning of a long tail of smaller operators, and there's a lot of companies that are happy to have multiple accounts and also be with a niche bookie that does customer service in a different way or has something unique about them. So I think platform businesses are interesting that can roll out cheap, and we've obviously in a voice betting solution, which is like a Siri, Alexa type solution, but has got 10 years of data of being with 3 of the world's biggest operators, of being able to really pick very strange bet types and get them right through
Yeah.
voice. So I think that's an interesting play, and I can see why that could play out, because it's played out. You used to be like this all the time, or like this, and
Yeah.
now a lot of the stuff I do is through voice, and voice has grown
Yeah.
significantly through Siri and Alexa. And I think all of the different offshoots, we're doing a few different niche option deals at the moment, but I think, like you say, things that solve the customer issues in the US are where we focused.
I tend to agree. I like platform, particularly those that use automation. So any customer-related journeys. There's a company which we're particularly keen about called Proto. It effectively automates the customer journey, right? So you don't need to deploy any human assisted, particularly for the lower ends of support. You just have an AI that is, for all intents and purposes, lifelike.
Yep.
And that really kind of solves the value problem, right? And I think where there's money to be made is actually in these companies that are no longer just license or tools-based companies, but they become value creation. Because a public company at some point is going to say, hey, my EBITDA is going to be increased by 6% just if I deploy the solution.
Yeah, that's right. That's the opportunity, isn't it? You find these non-listed businesses or private businesses that can deliver significant revenue uplift, and the multiple that a listed operator can get, especially in good times, is so significant that it's
Yeah, I think that makes sense, and I think payments is the way to go. If we can solve not having to pay 40-50%, right, of your withdrawals and deposits in Brazil and India, then I think somebody's going to make a unicorn there.
I agree with you.
That's all we've got time for.
Thank you, Julian.
Tom, always a pleasure. Really good to see you.
Thanks very much.
Hope you've learned something today. Thank you for listening.
Thank you. Thanks, Julian.
Really good, sir. After you.